Hello and welcome to BQ Prime. Joining us today is Tata Communications CFO Kabir Ahmed Shakir. Fresh off the Investor Day, where the company enumerated its plans for a CommTech quest. Mr. Shakir, pleasure to have you today. You're expecting your data revenue to double in the next 4 years to 28,000 crore. That's a CAGR of 18 to 19%. That's a big jump from the single-digit growth that we are seeing in the last 5 years. So, when do you see this accelerated growth coming in? At what time do you think it will kick in?
If you actually look at our recent history, although we've probably grown at 6% CAGR, but we always called out that our ambition, at least in the medium term, was to get to double digit, and we got that in the last 3 quarters. I think now it's time to get to the next orbit. This is something which has been in the works for a while, as we were looking at what the market opportunity out there is, both from our product towers and geography. And we do believe that we have an opportunity to double our data business to 28,000 crores over the next 4 years. The timing of it, if it's lumpy, it's equated, that I'm not really sure about that. And that's a matter of detail that we will uncover as we get on. But I think the most important part is that we would like now this company to start delivering growth of a different order of magnitude, quite diverse from what its past performance has been. And we're quite excited about that.
Okay. So does this accelerated growth, how does it impact your margins and also your operating leverage, etc.?
We have called out 23 to 25% as our margin guidance, and we are continuing to maintain that margin guidance. There are multiple factors that play here. We do believe that while the top line is ambitious, even maintaining this 23 to 25 is also ambitious. Why do I say that? The bulk of the growth is going to come from our digital portfolio, digital platform and services, and the entire digital portfolio, including incubation. Our core connectivity is poised to grow at low to mid single digits. So sheer mix effect, of it, the low profitable business growing at a faster pace, just gives that weighted average effect. Will we get operating leverage? Absolutely, yes. But we are also going to be in this crucial period of next 2 to 3 years. We are continuing to reinvest that back into the business, so we can propel and get to the growth ambitions that we want and get to 28,000 crores. So I would say, look, can we get more margins? Absolutely, yes. But then that will come at the cost of future growth. And until we get to that steady state level, I would like this company to keep reinvesting, the operating leverage that it gets back on, on growing the top line.
All right. So towards this growth endeavor, what is the strategy? So what is the capex looking like? Are you looking at organic growth, inorganic growth, the hiring plans? Can you just guide us through the growth strategy for the next 2 or 3 years in these parameters or some more?
Yeah. See, we don't have a predetermined number for inorganic.
Okay.
But is inorganic part of my assumptions and the growth plans? Absolutely, answer is yes. And that is because we don't want to be naive and complacent, especially if you want to be a digital ecosystem player, providing the digital fabric, to our customers, that there are capabilities that are present out there. And sometimes you can organically build those capabilities, but it will take time. If those assets come to us at a good value, if they bring me the complementarity of a portfolio gap, being fixed, or a go-to-market and getting complementary customer base, I think these are all, very, very value accretive opportunities to look at. And yesterday in the Investor Day, we unveiled what would be our operating principles when we look at M&A. Yeah, we will be meticulous. We will be responsible in where we look for those targets. We will obviously see the strategic fit, of those, and they have to be overall value creating, for Tata Com shareholders. So that's going to be our guiding principle. So we will definitely look at M&A, and I'm quite delighted and pleased that compared to 2-3 years ago, where we had a blank funnel, we have a very active M&A funnel, as we speak. Case in point, Switch. Yeah, for example. And we can talk about it, a bit more. But I would say it has given us a certain capability that we did not have. We were a largely global to global player, and it gave us regional to regional, capability. Plus, it also gave us video production capability, which we did not have. So today, when I'm making my offering to my customers, I'm so much better with this offering. So it ticks me all the three boxes on the operating principles that we called out. Yes, capital, hiring, the right talent, and all the right tools we need in order to succeed. None of them will be spared. Everything will be funded, and that's precisely the reason why we are going to do this tightrope walking in terms of margin as well. And by the way, if we look at it organically, it will only push us down in margins, and it's going to be a bit of a heavy lift for us to measure up and get it back to 23.
Got it. You mentioned about the Switch acquisition that you were talking about how it's coming in for you. Also talk to us about the 5 business verticals that we have also already spoken about once. The digital platforms, IoT, cloud, media and communications, and cybersecurity, the 5 pillars that you have. How do they form the base of the growth that is going to come in now for you?
See, well, I would want all cylinders to fire.
Okay.
Yeah.
Not one outsized presence among these?
No, not necessarily, because I think each of them have potential.
Okay.
Each of them have a very unique, proposition that we can build, and offer to our customers, and they are not mutually exclusive, either. It's not like as a customer is going in for one, it's not going to go in for the other. So we would like to push each of them hard to their potential. I think I've mentioned this before also. They all have a potential of $500, $700, $1 billion that we can get in the next 4-5 years. Yeah. So who will fire fast, and all depends on our ability to innovate, get our product, offering, and our platform offering, and our solution offering right. Plus also the customers, who need to embrace, these technologies as well. And then, we can get there per se. So I would say a combination of all of those things, including our core connectivity business, which although might be growing at a low to mid single digits, we must not forget that the market, globally is declining. India is growing, but international market is actually declining. And even in the declining market, for us to continue to grow is also an important, element.
Okay. To extend on that point, during the Investor Day, you actually mentioned that your international operations to outpace that of India. How is that going to come about in this environment?
If you actually look at today, we are market leaders in India. We'll continue to maintain our market leadership in India. India is a very important market, home market for us, and we will not lose focus there. In the international area, from being a very peripheral player, we're going to be a strong challenger, strong contender.
Despite the market conditions?
Absolutely. Absolutely. So that's why we will win with our digital platforms and services. Whether it is smart cities that we actually won in Medina, and can we replicate that multiple places? Absolutely, yes. With our Move portfolio, a lot of the opportunities are in the international, regions. The adoption of course, EV and all of this will get adopted almost equally, in India as abroad. But you see that pace being a little bit more, faster as well. So all of this, gives us indicators that we can, and also we're starting from a slightly, lower base. India international is about 50-50. But if I look at each of the other geographies, we have, much smaller bases there, and clearly, gives us enough headroom for us to deliver and improve.
Okay. Last question to you, sir. In the last interaction, you told us, and I'd like to quote, "I'd like to have my head in the clouds, but feet on the ground." With regard to growth now, this is actually regarding growth in these uncertain times. So where are we placed now? Where are you placed now after the Investor Day, looking into the future, looking into FY24 and beyond? Where are you placed now?
I am extremely inspired. I'm very, very inspired with the opportunity to double our business. And when we look at it, I don't think we should get clouded by recency. We should just take a slightly longer view of what this business has been, delivering. We were low to mid single digits, totality, very low profitability, single digit ROCE. we've transformed this business in a significant way. I think we today have a license to dream of a bigger and a better future for Tata Communications, and through that, for our customers as well. So I'm hugely inspired. But at the same time, all these plans have cautious optimism built into it. I mean, I did talk about cautious optimism also, not optimistically cautious, but cautiously optimistic, as well. And that is also built into those plans. That while we will, put in investments, but those investments need to deliver, right? We will, of course, hire people. But if I don't get productivity, there is nothing called gospel. We will pull the plug, out there. So therefore, the rigor in any of these is not absent. The rigor will continue to be there. We will aspire, to reach the moon, and we will resource the teams appropriately to go and realize the dream.
All right. Thank you so much, Mr. Shakir, for joining us today and all those points that you gave us. Thank you, viewers, for tuning in today. This is Tushar for BQ Prime.